What's going on, everybody? It's October 26, 2022, daily log episode 38. Today, we're going to cover US 500. I'm going to start on the daily time frame, just kind of walk through all the way down to a 5-minute. What played out? There wasn't anything significant, but I do want to start out on the higher time frames. I actually want to go out to a weekly time frame just to kind of keep you guys in a reminder that I believe my bias is obviously switching for right now. Looking at the weekly time frame, obviously at the end of the week, at the close, I'll see where this weekly candle ends up. But if we close above the premium end, then I'll probably be looking for this weekly bearish order block to be traded into, which would align with the daily bearish fair value gap. This could take, like I said, another week or 2 weeks to play out to even get up into here. But it's just something to keep in mind to understand where you're really at. So we could, even though we're bearish overall, right? This is our macro structure, our dealing range high to dealing range low. We're going to be looking at micro, so lower time frame structures. So you can see on the 4-hour, I can already see it. This is your dealing range low to dealing range high. Now, it doesn't mean we necessarily need to pull back or retrace into a discount right away or at all necessarily. We ran out the sell stop, so right now we should be looking for possible longs into the fair value gap. Again, you can go short on that retracement to go long. So it's just mapping out on your higher time frames. And the reason I'm speaking about it, because I had a few people, message me about higher time frame narrative and understanding it. There could be multiple narratives that play out in one session, meaning like today, you could have went long to the high of the day and then looked for shorts to close out the day. So it's just understanding really where you're at and where you think daily candles can play out in the structure. So we have the volume imbalance, and like I said, note the 2 down close candles there. So that's all I have on the daily time frame. Looking at the 4-hour time frame, this can get deleted. We had our market structure shift above the high here, and then we used last night this 4-hour fair value gap to send price higher, take out the high of the day that was set basically after the close yesterday or right before the close. Going down to the 1-hour gives a pretty nice view. We actually gapped down, and I know ES had that as well. Came into this fair value gap and then sent price higher above the buy side liquidity. And I was noting, if you go down to like a 30-minute or 15-minute, we ran out the buy stops, and I said after we run the buy stops, watch how we displace lower. And ultimately, we got that displacement lower. If you look at US 100, US 100 failed to make that higher high, while US 30 made it, and US 500 made it as well. So it's a bearish SMT divergence. Let's go down to a 5-minute, maybe even some lower time frames here. So right at the open here, we displaced higher. We have a small fair value gap in here, which really isn't that great of a setup to me personally. The reason being is I would have liked this low to be ran out or this low to be ran out, and a little bit better displacement higher. I would actually like this high to be closed above personally to really like longs. Let's go down to, let me actually rewind this here. 3-minute, 2-minute. I know ICT was actually going short prior to the open, which this is the YouTube model. And this is a little bit more difficult for me to really trust due to the time. And I wasn't necessarily bearish on it, but that just is ICT. If he, obviously ever puts out videos and it makes you feel like, man, I missed that move, or how did I not see that? I mean, the man's had 30 plus years experience with these markets and knows them very, very well, knows himself very well. So don't feel bad if you obviously don't catch the trades that he catches, but I'll cover what he did take So we have the buy stops being ran. We have a displacement lower. We have a market structure shift underneath this low here. We have a breaker right here. So all of these last down close candles, your bearish candles here, are your breaker. Returns into a premium relative from the dealing range high to the dealing range low, and a small little fair value gap as well there to note. So that's a pretty good model. That just shows you basically how fractal price can get. Nothing too significant on a 2-minute. Even the 3-minute gives a little better view. Obviously, I wouldn't personally have taken this trade, but I'm just trying to show what he did take, and then he took out profits underneath this low. And I think that was it. Maybe he was trying to leave a runner here. I forget. So that was his trade. I really only would have been looking for longs during the open, but price was very sloppy on the return up into the buy side liquidity. There's a small setup here in the 1-minute. Personally, again, I don't really like this setup due to the factor that there was really no sell stops taken. I mean, obviously we did the work on higher time frames, and the algorithm is kind of spooling towards that buy side liquidity. But I also like having a fair value gap that's on the 5-minute layered all the way down to a 1-minute majority of the time. And there really wasn't much here on the 5-minute. Bullish order block we used to send price higher. 4-minute, 2-minute. So the 2-minute has a fair value gap from this low, or from this low to that high there. Comes into a discount. Looking at the 1-minute, a little bit more clear picture. Fair value gap here, and then sends it up the above the buy side liquidity. But for me, I personally would have liked shorts just because I was gauging that we were going to displace lower after taking out those buy stops. So we ultimately did get that. There was no entry for me really. You could have looked on like maybe a 2-minute. There was a small setup, but it was inside of lunch hour, which is my rules that I don't trade during lunch hour. Some people, if that's part of your rules that you can trade during lunch hour, then obviously it was a pretty decent setup. Displacement wasn't too nice, so I don't really love that as well. But we have a displacement underneath the low here, turns back into a premium, returns back into this small fair value gap there, and this is coming off the backbone. You ran buy stops, there's SMT divergence, we see that displacement, comes back into a premium, and then there's one other setup that I do like from this dealing range high down to the dealing range low. Fair value gap here, and then price ultimately dumps. So I was annotating on the 15-minute. Once we saw that heavy displacement, I was looking for a return back into that fair value gap, hopefully to send price lower. So this is what I noted here. It was right around like this time here. So we have a market structure shift on the 5-minute underneath this low here. And I was looking to get into that fair value gap, at least into the equilibrium, but we never got it. We just tapped into it not too long ago, which kind of goes into the question somebody asked me, is that entry still valid even after, the day ended? And for me, the answer is no, because the model is solely based around time. The algorithm is based around time because time creates the highest probabilities. So for me, I'm always trading inside of that time zone, which is New York session. I don't trade lunch hour. Sometimes I dabble in PM session, but rarely. So I always base my entry patterns off of time. And if I don't get that entry, then it is what it is. Even if this thing completely melts from this fair value gap, I honestly couldn't care less, because I know my rules, if I follow them, create consistency and profitability over long term. But if I start adding in exceptions and I add more variables to my model and to my system, that's going to add different results over long term. And that's something I've just came to terms with, is I have to eliminate as many variables, because trading already creates so many different variables, and you yourself create so many different variables. So many different, probabilities can play out within yourself and within the market. So you want to cut those down by using your rules, and that way you don't have as much variables that are expanding throughout your trading plan. If you can simplify it and cut it down to a certain time zone, one pair, one model, one set of rules, and you're not deviating from that. You're not going away from your rules. And when you start, and I know it's not easy, but when you start deviating away from your rules, you're adding more variables to that trading plan. So that makes sense how you yourself make trading less probable because you're not following those rules. You're adding exceptions. So that's something really key to note. Either way, again, I'm not trading this week, so if you can tell in the Telegram or even these daily logs, I'm really not super in sync with order flow. I'm really not paying attention too much. I just hop on the morning session, I look at the charts and kind of just update. But besides that, I'm just waiting until next week. So I think that's it for tonight. I'll do a little updates in the morning. But until then, good luck and good trading, everybody.